Hello friends, in today's video we are going to talk about a common doubt a lot of new Elliott Wave traders have. And in fact I have seen that a lot of people who have been using Elliott Wave for a few years, even they get confused with this. So what exactly is this doubt? Alright, so let's take a look at this situation where we have a 5-wave impulse, or it could be any other form of motive wave, could be a diagonal. So we have a 5-wave sequence essentially followed by a corrective move. In this case I have taken triangle because this is where I think a lot of people get confused, but the same thing is applicable to other forms of correction as well, be it double zigzag, triple zigzag, expanded flats, or any other kind of flat. So the doubt that people have is when you try to determine the size of the next wave or the third wave. So this is wave 1. So 1, 2, 3, 4, 5. So let me mark it as such. So this is larger wave 1. This is larger wave 2. And then let's say 3, 4 and 5, right? So this is how it looks. Now, when you try to estimate how large wave 3 is going to be based on Fibonacci levels and the principle of equality, then from which point do you actually start measuring it? So if I take measurement tool, Fibonacci measurement tool, so this is the lowest point or the starting point of wave 1. This is the highest point. And then now this is where the doubt arises, that should you start measuring this from this point because this is the lowest point of this retracement, in this case A, or should you take any other point like C or E? The right answer for this question is you have to use the last leg of the correction as the point from where next wave should be measured. So in this case, this is wave E. So we have to measure it from here, from wave E low, right? So that's how we will get the size of potential equality level of the next third wave. So based on this, we get it at 134,404. So this is Bitcoin. So that's the reason we are seeing such a high value. We can see other levels as well, 138.2%, 161.8% at these levels, right? So you don't have to use the lowest point always from the correction. You have to use where exactly the correction ended. That is the right place from where next up move should be measured. Let's take a look at a real chart. So here I have Tesla's current chart daily time frame in front of me, and here you can see we have a clean 5-wave sequence. This is 1, this is 2, this is 3. Within 3 we can see 1, 2, 3, 4, 5, and then we have 4, and then we have 5th. Within 5th also we can see 1, 2, 3, 4, 5 subdivisions, right? And then we have a triangular A, B, C, D, E correction in this. So now when I want to forecast the potential size of wave 3. So when I say wave 3, this is wave 1, this is wave 2, and this is going to be wave 3 on the upside. So I will be using the Fibonacci estimation tool. So I will take this size. Okay, let me use the magnet. So it will give me correct levels. I will not use this lowest point of A to project the size of wave 3. I will be using the last leg of this correction, that is point E, and this gives me 451.78 as the equality level for third wave, because at this point wave third will be equal to this move or wave 1. So I hope that clarifies this point. But there are a couple other things that you need to consider. If you are taking triangles specifically, then wave E will typically have throw unders and throw overs. So basically this is a up move, so we are talking about a throw under. If it was a down move followed by a correction, then we would be talking about a throw over. What this essentially means is E wave usually breaks the boundary of the trend line before it actually ends. You can think of it E wave signature, because this is very common, and this you will find in most of the cases where ABCD triangle forms. So now assume this is the point where throw under happened and these three candles have not formed. So you cannot see these three candles. So one common mistake a lot of people do is, as soon as they see a throw under kind of situation, they will assume that E is done, which is a very big mistake, because E does not necessarily have to be this kind of, three wave or a simple corrective structure. It could further evolve into something like, any kind of different thing. For example, this E could actually evolve something like this: A, B, C, D, E. So E itself could be a triangle, or it could be any other form of corrective structure within it. So you should never try to anticipate where wave E will end. The better way to trade this is when there is a breakout of the BD trend line, right? So when the price breaks out above this, closes above it, that's when you should assume that now you have wave E in place, and that's when you should estimate it. So even now we are estimating it at this place, but this does not guarantee that E has finished, because it hasn't yet broken above trend line BD. It could actually be 3, then this is another 3, and then there could be another 3, and this could fool us many times before it actually finishes. So that's the reason I'm saying you should never try to anticipate where wave E will end. Just wait till the price has broken above this triangular structure, in this case above the BD trend line. That's when we will get a confirmation that okay, now we have the E low in place and we can now estimate the size of third wave. There is another thing that you can do, which is using classical technical analysis. And what classical technical analysis says about triangles: if you want to measure the thrust once the triangular structure is broken, then you can measure it using the maximum height of a triangle. So in this case, if I take measurement tool, then this is the maximum height of this triangle, right? Because this leg is the largest one. This is smaller, and this is even smaller, right? So now you can take this height, the maximum height of the triangle, and project it at the breakout point. So whenever breakout has happened, we are assuming in this case that breakout will happen somewhere here. It could happen at any other place. It could happen later on at some other bar. So let's say that breakout happens on this bar. So this is where we are going to put it, and that gives us a level of 420, right? So if we go by classical technical analysis, the target for this triangle breakout would be 420. But if we are doing an Elliott wave analysis with more context of what happened previous to this triangle, so we know that there was an impulse and then this corrective structure has happened, and after that there has been a breakout. So then we will estimate it as per the equality, because third waves are more often than not equal, if not larger than the original wave sequence. So you could use this as a more conservative target, like 420 in this case, and Elliott wave equality as a second target potentially. And you could even have a third target if you are trading specifically third wave, where third wave could be 138.2 or even 161.8% of the original 5-wave sequence. I hope this video clears a doubt from where you have to measure the next wave projection. If you have any questions about it, please do let me know in the comments. and I will be happy to answer. So that's all for this video. I hope you liked this video. If you did, subscribe to the channel and click on the like button. We'll see you in the next video. Thank you.